The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A wonderfully warm welcome to Squawk Box this Friday morning with Juliana Tatelbaum and myself, Steve Sedgwick. And these are your headlines. President Trump's tariff blitz keeps investors on edge ahead of, wait for it, Liberation Day, with the S&P 500 and Nasdaq on track for their worst month since September 2023. Elsewhere, the Chinese president, Mr. Xi, meets with top global CEOs in Beijing, looking to boost ties with business and calling for trade dialogue with the US.
Santander chair Ana Botin tells CNBC the Trump tariffs amount to a tax on consumers and that a slowdown is inevitable, but insists the U.S. will come out worse than Europe.
There's no doubt that tariffs are a tax on consumers. It means slower growth and it means higher inflation. We believe the U.S. will slow down more than Europe. Other things equal, because Germany is 1/3 of the economy of the Eurozone. That's huge. So that's going to give a boost.
And it's game on. French game maker Ubisoft clinches a more than €1 billion investment from Chinese tech giant Tencent, ramping up backing for its biggest franchises.
A very good morning to you. How are you?
Good morning. Happy
Friday.
Friday.
Have got no idea how clever I am. And I don't mean because I think I'm a smart ass, because obviously they think I know that anyway. But no, because when I was said hello, and you are actually sitting to my right.
Yes.
In the double box. So you're there, and my inclination is to say, with Juliana Tatelbaum, and no, I have to go like this. So I have to look at the empty space to my left to actually point to you correctly. I feel very proud of myself, because I can't tell you how many times I've got it wrong when Karen's sitting here.
You know, most of the time I'm working to try to get it right. You were working hard to get it wrong today. I think it's pretty telling.
I think the viewers will say that I don't have to work too hard to get it wrong. How are you?
I'm pretty good.
Yeah, I saw you on the social media yesterday.
Yeah, well, big announcement.
Oh my God, I couldn't move for LinkedIn and Instagram responses to the big news, which I don't know if our viewers actually who watch the show have actually heard. You are a permanent member of Squawk Box in a few weeks' time.
It's all kicking off, yeah.
I'm genuinely touched, excited. I think you're going to add effervescence and joy to the show. So I'm really excited, honestly.
Well, I couldn't be more excited. Thanks for
the early starts.
Slightly later starts.
I'm looking forward to the traffic 1 hour later.
Slightly later starts. We'll be hitting the airwaves 1 hour later. I think hopefully later in April. Yes. Date to be confirmed.
Well, there's a lot of building work going on. Let's be brutally honest. It's looking magnificent, by the way. I had a sneak peek as I came out of the car park this morning. There is a whole host, and if you haven't seen the big announcement yesterday, I won't spoil it all for you. Go and have a look. But Juliana is the key bit of news, and she will be the third leg of the stool, and I'm hoping you and Karen together will continue to keep me in check.
We look forward to doing our best, that's for sure.
Tell us about the markets.
So yesterday, U.S. markets ended little change. What has been clearly a volatile week in terms of sentiment, the back and forth around tariffs, and then obviously that news midweek from President Trump that he would be pushing ahead with 25% tariffs on the auto sector, all auto imports coming into the U.S. Yesterday, though, we saw the Dow Jones, the S&P, and the Nasdaq all end just marginally lower. For the week, interestingly, U.S. markets are actually higher. Again, pretty tight margins here, but given the news of the tariffs and all the uncertainty that remains, pretty remarkable, I would say, that markets have ended or heading into the final day of trade this week. Little change, actually slightly higher on the week. In terms of Asian trade, we are continuing to watch the automakers quite closely, and you can see we're seeing continued weakness in the South Korean market, which is heavily exposed to the auto sector, with Hyundai, one of the big movers there. That index down more than 2%, Nikkei 225 down about 2.2%. We've also got a bit of a pullback now in the Hang Seng and the Shanghai Composite. In yesterday's trade, we saw some more resilience in those two parts of the Asian market. Now, looking at the automakers in more detail, I mentioned that's what's driving the losses in the South Korean market, as well as in Japan. You've got Toyota, Mazda, Honda, and Hyundai all more than 4% lower in overnight trade.
I do want to just mention Tesla, because there's a lot of reasons why people are skeptical of Tesla. I understand most of those. But I want to show you the Tesla share price over the last couple of days, because from its lows, that's a great chart. Thanks, guys. And if you can do an even shorter time frame, like a week or something, that'd be brilliant. It's down aggressively, we know that, but it's rallied really, really hard. And like, I talk about Tesla a lot when it goes down, but I want to talk about it when it's going up a little bit. Week to date, Tesla has rallied 10%. And I was a little bit bemused by this, but you've been looking into this, and just, I mean, we've got 10 seconds, we've got a big guest coming up, but just tell us why you think Tesla's rallying hard.
It seems to be because Tesla's seen as the biggest beneficiary of these auto tariffs, on the basis that that Tesla cars are largely U.S. made. Now, obviously, they get some components, especially the electrical components, from abroad, but they are largely American made, and they're seen as one of the big winners here. Initially, we saw yesterday when we were doing the show a negative reaction in Tesla pre-market, but yesterday a different story, a major difference in performance versus the U.S. rivals. But I think looking at it from a global standpoint, you've got BYD hard on its tail. So maybe Tesla's the winner in the U.S., but globally, not so much.
Phenomenal data about BYD. Okay, we'll come back to this later. Thank you. Brilliant for that. Okay, investors are bracing for this is big data, PCE data out of the United States. It's the Fed's preferred inflation gauge. The core and headline print for February is expected to come in flat on the month at 0.3%. The year-on-year core figure is expected to tick slightly higher, up 10 basis points to 2.7%. It comes on the back of initial jobless claims that came in at 224,000 for the week, down by a mere 1,000 on the week, and pretty much in line with forecasts at around the same level as we've seen for the past few weeks. This despite concerns about the impact of tariffs and President Trump's plans to radically downside the federal government. Really good point to bring in Brian Coulton, who is chief economist at Fitch Ratings. Brian, thank you so much, sir, for joining us. God knows what time it is where you are, sir. But look, it seems to me, looking from the outside, the sentiment data looks really poor at the moment. But actually, the hard data coming out of the United States is less poor. In fact, it's actually rather solid. How, given that is the basic premise from what I can see, how is it that you think actually the forecast for the US growth over the next couple of years, you think actually they need a bit of a downtick?
Yeah, I mean, before the Trump tariff hikes started to take place, and they've been staggering in their speed and breadth, but before that, the news on the US was actually surprisingly strong. The consumer was holding up much better than everybody expected. And we're still seeing that momentum in the data. If you look at like 3 month on 3 month growth in consumer spending, it's still pretty decent. You know, you mentioned the jobless claims, they haven't increased. Payrolls are still doing okay. The hard data is holding up. We don't think the US economy is going to fall over instantly as a result of the negative shock from tariffs. But as we get to the middle of the year, it's going to be a lot clearer. I think second half of the year, it's going to be a lot clearer the negative impact of tariffs on activity. That's why we got growth slowing to about 1.5% this year and next year.
Well, it turns out it's not 1 a.m. in Manhattan. You are actually in London on the same time frame as us, so that's good to know. Not quite such an early start. Tell me a little bit about the PCE data and about inflation data, because one of the big props for the US market could well be declining US interest rates as well. But there is a school of thought out there that says actually the Fed has to be stunningly cautious and hold off for the foreseeable future.
No, they really do. Again, just looking backwards for a bit, the last few months, the inflation data before the tariffs have kicked in, not been that good. If you look at the CPI core measure, that's kind of moved up on a momentum basis to 3.75%. It's kind of going the wrong way. Services is proving sticky. The declining core goods prices, which had been a big driver of disinflation last year, that's kind of over. And then when we look forward, that's clearly going to go up as a result of the tariffs. So I think the Fed is going to be quite cautious before doing any further cuts. The other really, really interesting development has been this surge in household inflation expectations on a 5-year ahead basis. We've never seen anything like that for absolutely ages. And that is starting to worry the Fed, because that's a real sign that the household sector doesn't believe the credibility of the inflation target. They cannot ignore that if that remains as elevated as it was in the last print.
Brian, what does history tell us about those long-run inflation expectations actually translating into, the hard data? To Steve's earlier point, a lot of this at the moment is expectations that have softened, expectations that are have deteriorated, rather than what we're actually seeing in reality.
Yeah, it's early days, right? This change in US trade policy only started at the end of January. Economies don't move that quickly. When you shock policy this aggressively, economies don't suddenly instantly respond. So, but it seems pretty clear from the history that we are going to see a boost to inflation. We're going to see higher CPI inflation, lower real wages. We're going to be seeing greater costs for US firms because their imported inputs are going to become more expensive, and this massive surge in policy uncertainty is going to weigh on business investments. So there's an awful lot of stuff out there that tells you have to expect a slowdown in the US economy, even though so far it's only in the sentiment data.
When you talk to proponents of President Trump's policies, they argue that these tariff policies and his trade policy more broadly is all about bringing jobs back to the United States. But when you hear from foreign companies, when it comes to their potential investment plans, a lot of this is really long term. It will take 4 or 5 years at a minimum for the auto sector, for example, to build manufacturing facilities in the U.S., shift their supply chains there. So when it comes to this bull argument around jobs in the U.S., what's the time frame if you are going to take that view?
I mean, the sorts of restructuring that they're talking about shifting the US economy from a consumer-driven economy to a producer-driven economy. Now, I can't think of any economy in the world that's more consumer-driven than the United States. So that's a massive change in the structure of the US economy. Even if everything goes completely to plan in terms of how it affects reshoring, you're talking 5-10 years. So the idea that you're going to see some benefits from this in the near term because US firms are more protected, you're just not going to get that relocation of factories closing down in Canada, moving across to the US. That's not something they're going to do unless they believe this is a long-term, multi-decade change in US policy, which they just don't know. So I think it's pretty unlikely we're going to see big reshoring in the near term in the US.
Brian, it seems to me we take away all the oscillation and policy back and forth. We take away all the angst transatlantic and the concern about traditional partners. For me, a lot of the US Trump policies comes down to one thing. Are Americans, and it kind of alludes to what you just said, are Americans willing to pay more for homegrown products? Are they willing to pay more for refrigerators made in the States, for cars made in the States, for homegrown products? Because that is the price of retrenchment from every economist I've spoken to, whether they're in favour of this or whether they're not in favour of it. Is it that simple? For me, it seems that simple in many aspects.
I mean, basically, you're looking at effectively subsidising producers at the expense of consumers. Well, good luck with that. I mean, the US consumer has benefited for 20, 30 years from cheap goods imports coming from China, coming from the rest of the world. Imports are a source of supply. The US spends more on goods and services than the amount of goods and services it produces. So it's getting stuff from the rest of the world. That's a benefit to consumers. So to try and stop that is a major shock. And I don't see how the consumer can be completely indifferent to that. I just don't see it's going to work.
It's fascinating to think about that structural shift, the way you just described it, that what Trump's policies are doing are trying to change the American economy into a manufacturing-led economy, which is it's not what's led the U.S. to prosperity historically. At the same time, when it comes to Steve's point around the consumer, the old adage is not to bet against the U.S. consumer. It just continues to surprise time and time again. Why is this time going to be any different in terms of that resilience of the U.S. consumer? It's really part of the psyche in the U.S.
Well, their psyche has kind of been rattled recently. If you look at those inflation expectation surveys, right, they don't believe this story. They think stuff is going to get more expensive. Consumer sentiment has declined on lots of different measures. So. This is a really, really big change in the structure of the economy that they're aiming to achieve, and it's going to be a tax on consumers.
Brilliant. Brian, thank you very much indeed for joining us and joining us out of the time zone that is GMT. Well, I've established that now. I assumed he was in New York. Brian Coulton, Chief Economist at Fitch Ratings. Actually, don't we change the clocks this weekend?
We do, yeah. Are you ready for it?
Spring forward.
Yeah.
Does that mean
Spring ahead.
No, it's spring forward, fall back.
Spring ahead, fall back.
Yeah.
So we're saying the same thing.
Yeah.
So we lose an fall back.
So we lose an hour's sleep.
Yeah. Yeah.
Well, no, and to be fair, when it comes to the autumn anyway, no one tells my cat and dog, and they start howling and making noises at 6 a.m. anyway.
Yeah, no one tells my baby either.
Of course.
No, yeah.
And she watches Squawk Box.
She does. She now points to the TV when it's off and says, "Mama, Mama." Which
Points
is
at me and says, "Mama."
She actually does point to Karen and say "Mama," so I'm not sure how. She's not able to just differentiate this yet, but soon.
Well, I can differentiate. You're both magnificent. Canadian Prime Minister Mark Carney says the country's old relationship with the US is, quote, over. Speaking to reporters, Carney called for a broad renegotiation of US security and trade relations and vowed to respond to President Trump's trade levies.
Our response to these latest tariffs is to fight, is to protect, and to build. We will fight the U.S. tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada. We will protect our workers and our industries during this difficult period. But above all, we will build a new Canadian economy. We will build Canada strong.
Well, here's a stock we've been keeping an eye on this week. Novo Nordisk, the Danish healthcare giant, made headlines after SAP replaced it as the continent's largest company on Monday. But it isn't just this week that the stock has seen major declines. It's actually the worst performer on the stock 600 for all of March, lining up the firm's worst month in more than 2 decades. And it's lost more than half of its market value since its highs last June. This amid investor worry that its Wegovy wonder drug is losing edge to Eli Lilly's Zepbound. Plus, the firm is vulnerable to Trump's tariff threat since it produces the active ingredients for Wegovy and Ozempic in Denmark. Then again, Kepler Chevreux analyst David Evans, who once called the enthusiasm around obesity drugs a bubble, says this is finally the entry point as he raised his rating to buy from hold.
It's extraordinary. And you know, I think there's a metaphor here for, we talk about the granolas in Europe, which are our version of growth stocks, and we talk about the Mag 7 as well. And again, it's something we've talked about a lot on this channel. I know you're a pharma speciality, so I'll let you get to that in a second. But the fact of the matter is, these growth stocks are phenomenal. But there is a price for everything. And if there is a rival that comes on the scene, for Nvidia, for Tesla, for any of these people as well, then the unbelievable optimistic price valuation that we had prior to that penny dropping, that can disappear quite quickly. And Novo Nordisk is a great example.
It's a really interesting comparison you make to Tesla, because I think it is really, it applies here that Novo Nordisk was the first mover, but they weren't the only ones working on these new class of drugs, the GLP-1s. You had Eli Lilly at the same time working on these drugs, and you've got Pfizer working on them, you've got AstraZeneca getting into this space as well. So they weren't the only ones. They were just the first mover, and they really broke open the market for this new class of weight loss drugs. But now,
as Tesla did with EV.
Exactly, as Tesla did with EV. But now you've got BYD hot on Tesla's tails, and then all the incumbent automakers also working to try to come up with their own EV offering. And the same thing's happening in the pharma space. But with Novo, the bull argument was always it's going to be a 2-horse race for years to come, and there's just such a big pie that so long as all the drugs are effective, there's going to be room for all of them. But that's not what we're seeing.
It's just about weight loss now, and as you have beautifully explained in many pieces, it's about potentially these are lifestyle drugs that could be forever drugs as well, depending obviously on a lot of the testing over a longer term period of time. They could be helping against a whole host of comorbidities.
Yeah.
Cancers, heart disease, COPD, all kinds of stuff. It could be quite amazing.
And that has been part of the story. I mean, you look at what, who's willing to cover these drugs now. You've got insurers, you've got scope for national healthcare systems to cover these drugs. But what's playing out here is that we are seeing a preference for the most effective drug available. And there was the view that even if Novo's drugs were a little bit inferior to Eli Lilly's, that there would still be demand for them and it would still serve Novo. But that's not actually what we're seeing. You've got prescription data, and this is part of the reason the stock's been underperforming this year, that Novo Nordisk increased the supplies of Wegovy in the U.S. So there was hope that there'd been supply shortages. There'd been hope that once more supply came to the market, they'd see this, a resumption in demand. But that's not what's happened. We've actually seen prescriptions flat for Wegovy. Meanwhile, for Eli Lilly's competitor drug, we've seen prescriptions rising quite significantly.
Let me ask another question. We've already brought in the tech comparisons. What about the food producers as well? Because the big argument here was, whether it's Eli Lilly, whether it's Novo Nordisk, GLP-1, semaglutide, it surges for all kinds of reasons. People stop eating as much food. And we know that It's a terrible fact, but the fact is the Western world, and the United States leading, has an obesity problem. I think we can all admit that, can't we? So, but if the food producers are seeing less demand because of these drugs, is that still a relationship people are looking at?
For sure. I mean, you see it in like looking at anything from the ingredients companies that
make work with Unilever as well.
Yeah, with Unilever, also with Givaudan, Symrise, the ingredients companies that contribute to foods. And then the retail stores. I mean, we've been covering Walmart, who's seen smaller basket sizes from customers who are taking Ozempic, taking Wegovy. So you're seeing it across the food value chain that this has really transformed the way consumers consume food and drink. And it's definitely a trend that's continuing so long as these drugs remain on the market and remain prevalent.
Sure, great piece. Thank you.
Well, for more on Novo Nordisk, check out Karen Gilchrist's coverage of the firm's annual general meeting on the CNBC website. Coming up on Squawk Box, Chinese President Xi Jinping meets with global CEOs as he looks to strengthen business ties. We'll have the details. Ubisoft eyes a new gaming venture with the backing of a key tech player. Charlotte will have the latest. And as Trump's tariffs rattle markets, we'll discuss trade tensions with former UK Minister Penny Mordaunt. Don't miss that conversation at 8:30 GMT.
Chinese President Xi Jinping has met with more than 40 foreign CEOs and business leaders in an effort to boost relations. Mr. Xi told those present that China is a safe and stable place for foreign businesses. The safe and stable will not be lost on anyone. He also called for dialogue with the US to resolve trade tensions. Amazing piece of tape from Karen yesterday with the boss of Santander.
It's always fascinating to hear what Ana Botin has to say. She sat down with Karen at the IIF in Brussels, and Karen asked her how tariffs are likely to affect the ECB's rate path.
The fundamentals of the economy are strong, but the uncertainty and the volatility is at historic levels. So it's a really hard decision. So there is no doubt that tariffs are a tax on consumers. It means slower growth and it means higher inflation. How much slower growth and how much higher inflation, we don't know. But when you don't know what's going to happen in the next few months, you're going to wait to buy a car. You're going to wait to buy a fridge. If you're a company and you're going to put a factory, you're going to wait to see whether tariffs hit harder. So this is going to mean a slowdown in activity. That would point toward lower rates. Inflation would point the other direction. As of today, we believe the US will slow down more than Europe. Other things equal, because Germany is 1/3 of the economy of the Eurozone. That's huge. So that's going to give a boost. That's why there is more investment in banks like Santander. We're up 50% this year. And so on a relative basis, in the short term, Europe will be less affected than the US. So again, there's a case to be made for, rates coming down, but probably not as fast.
Karen also spoke to BNP Paribas board chair Jean Lemierre and the chairman of the supervisory board at Deutsche Bank. She asked whether cross-border banking consolidation is needed in Europe.
There are overall too many banks in Europe. The cost of running a bank, the IT cost, the cybersecurity protection, any examples you can take are all pointing towards the need for scale. But if you want to think more about cross-border, you also need to have the conditions for it. And today, the conditions are not yet fully ready for it. There's no banking union, there's no capital markets union. So there's a number of steps that need to be taken before you can seriously believe that that's going to happen. That we'll continue to see consolidation, for the reasons said earlier, is, I think, absolutely clear. It's a question of timing.
Same question to you, Jean.
The answer is good. I will add one or two comments. First, consolidation has taken place. I don't understand well the question. But consolidation of market shares. If you look at investment banking, there's huge consolidation over the 5 or 6 last years. So consolidation of the business with the corporate sector, with the financial institutions has taken and still taken place day after day. So there is consolidation. What you speak about is a different question. Is the merger on retail banking. And retail banking is not investment and corporate banking. Still, products are based on national culture. We know well, we are probably the largest cross-border bank in Europe, but behaviors are not the same. I will take one example. You have some countries in which you have floating rates on mortgages and some countries in which you have fixed interest rate. So it's not the same. It will take time. You cannot say this like this. Now, I will not make any judgment on operations which are being done, but banking union and single market are in favor of course, of cross-border consolidation.
That was, of course, Jean Lemire, who is the BNP board chair, and Alex Wynants, who is the chairman of the supervisory board at Deutsche Bank. Talking of Deutsche Bank, the group has extended the CEO, Herr Dr. Christian Saving's contract for 4 years and announced the departure of the CFO, James von Moltke. He'll be replaced by Morgan Stanley's deputy CFO, Raja Akram, next year after more than 3 years in the role.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.